Hi there, welcome to Kneppy Invest. Time for another portfolio and technical update. Unfortunately, ShareSite, and that's how I track the performance of my portfolios, have not updated their prices for ASX companies. In fact, if you have a look at that, if you are use their services, have a look at some of the share prices of those companies. Maybe it's just me, but for instance, Megaport has a share price of $12.48 in ShareSite, yet the share price of that company after trading had finished on Friday was $13. So these are not up to the date performance. In fact, it excludes the last trading day of the week, which was the best trading day of the week. In fact, the XJO was up 1.5%. So some of these performances are not quite accurate. Also, talk about some of plans I have in the next week or two in regards to the makeup of my portfolios. And then we'll have a look at technicals, have a look at indices, commodities, bonds, Bitcoin, and then 20 companies that are listed on the ASX. But first, let's have a look at the performance of my three portfolios. Before I talk about the performance of my three portfolios, I've also got three benchmarks here. The NDQ, which is, I think it's a beta shares NASDAQ 100 ETF. Also the XSO, which is the ASX Small Ordinaries. And the STW, which is another ETF, which tracks the ASX 200. I forget who does that one. Beta shares, Vanguard, who knows? There's a whole slew of ETF providers out there. Now, before I talk about the performance of these six things I track, I am thinking of changing the makeup. Not the makeup, I am actually thinking of consolidating two of my portfolios into one, the small caps and technical, or changing the makeup of these two portfolios. And the main reason I'm thinking of doing that is, in my opinion, I'm probably doing a bit of a disservice to the technical portfolio and probably hyping up the performance of my small cap portfolio, because quite a few of the companies that are in my small cap portfolio, I only bought those companies because of technical reasons. So thinking the main way to decide where a company belongs in these three portfolios is the original reason I bought the company. I bought the stocks. For instance, Doug, Duratec, Atlas Pearls. There's quite a few of them. Even IPD Group. I bought those companies simply because of breakouts or technical reasons, and I just put them into the small cap portfolio because they're small, and I wanted to hold them for a while because at that point in time, they were up big, and I didn't want to sell too quickly. So I'm going to adjust the makeup of the small caps and technical, and more than likely, that's really going to help my technical performance. In fact, I would say the technical performance since the start of the financial year more than likely is going to be up 40% because of those decisions I have made about a year ago or so. So looking forward to doing that during the week. More than likely won't merge those two portfolios. I still want a small cap portfolio, but as I go through time, more than likely I'm going to have just two portfolios: quality companies in my quality portfolio, and then more of a trading technical portfolio. And small cap companies might either feature in the quality portfolio or the technical portfolio. Now, onto the performance of the portfolios. But first, I had an active week. I actually took some profits in six companies. One of these companies I held for one day, Develop Global. I think I will show you the chart for this company, but I took profits when the company's share price increased 20% in almost one day. I was surprised how well that trade played out. I also took profits in Dicker Data, GUD Holdings, and a few companies that were in my small cap portfolio. And this is the main reason I went through this thought process, because I took profits in Mount Gibson, Phineas, and SiteMinder. Those three companies were in my small cap portfolio. And the reason I sold those three companies was simply to take profits. And I realized I didn't want to hold those companies for the medium to long term. I just wanted to take those profits. Anyway, now onto the performance of my three portfolios. And we know already, if you do or have watched these videos in the past, that my technical portfolio has been performing the best since the start of the financial year. And even in the short-term periods, it has been performing the best. Since The start of the financial year, my technical portfolio is up 30.4%. Small caps, which is just looking at or finding those smaller companies that have the potential to grow to be a much bigger company in the future, up 16.9%. And the quality of portfolio up 11.2%. So that particular portfolio consists of companies that I consider quality, that I want to own for the long term. And to be honest with you, most of the companies in the quality portfolio, I don't really look at the charts for those companies all that often. And the main reason I don't really have to or want to look at those charts is because if those companies are quality companies, the share price of those particular companies should go from the bottom left to the top right over time. Those companies should grow over time. If they can't grow, they're not quality companies. Now, the benchmarks, the NDQ has been performing spectacularly over the past year or so, up 16.1%, but that is coming in third, but significantly outperforming the Australian small caps, only up 4.3%, and the STW up 8.2%. To be honest, though, those ETF holders would love the STW up 8.2%, but I want to beat the market average returns. I keep hearing people say there's no point trying to beat the market average returns. You can't beat it, and I'm probably showing you you can. If you put time and effort, you can significantly beat the market returns. And if you can beat, even just slightly beat the market returns, over time, you're going to see your portfolio be significantly higher if you just bought ETFs like the STW. Now, I won't go into the shorter time periods, but you'll notice in the 1 week time period, the NDQ is actually negative 1.1%. So that does not include the final day when I'm pretty sure the NDQ was up about 1%. But overall, if you do include the last day of the week, the NDQ was actually down for the week, which actually did surprise me. Other portfolios, quality, small caps, and technical, all up between 0.5 and 1%. If I included the final trading day of the week, more than likely each of those three portfolios were well up by 1%, probably almost 2% for some of those portfolios. And the XSO and the STW would be up a fair bit. In fact, if I remember correctly, the small cap index was up about 2% on Friday. And we'll look at that, and I can confirm that when we get into the technical update part of the video. In fact, let's do that now. I briefly discuss the XJO in my what video is it called? The video I released late on Friday night. I totally forget what that video would be called, but I did chat about the XJO because there is a possible breakout right now on the Australian markets because the XJO is at a record high, 7,699.4. Now, there was a pretty significant resistance level at around about 7,620. We'll say between 7,600 and 7,650. I don't like one single price as a resistance or support level. I like a zone. And there is a possibility that we are seeing a breakout right now with the XJO. So things are looking up for the Australian markets, finally, because the American markets, particularly the NASDAQ and the Dow Jones, and probably the S&P 500, have all been breaking out, all been in an uptrend for a while. So finally, we are at a record high for the XJO. Not quite true for the XSO. Let's have a look at that. And I'm just going to confirm that it was up about 2% on the final day, not the week, the day. And it was up 1.95%, a really good day for the XSO, or the small ordinaries on the ASX. Not quite true for the Russell 2000. We'll have a look at that in a second. And not only that, the last time the XSO was this high was back in February 2023. So we're at a 1-year high for the small ordinaries. Not quite as bullish as the XJO, so we're way off the all-time high. So let's have a look at the weekly chart for the small ords. And the all-time high for this index was way back in September 2021 at around about 3,600. So still well off that, about not quite 20% off that. Not quite 20%, but more like 20% than 10% off the all-time highs for the XSO. So if you have been investing in small ordinaries or small caps over the past 2 years, you have been struggling. Now, it's been well known that small cap companies on the ASX have been under pressure, and this sort of confirms it, that when the XJO is at an all-time high, the XSO is still about 20% off from its all-time high. Now onto the Nasdaq, and the Nasdaq, beautiful uptrend. Another really good day on Friday, up 1.7%. I love Friday because three of my companies I do own either on the Nasdaq or the New York Stock Exchange had big days, up 10%. I'm pretty sure it was Amazon had a really good result. For some reason, Snowflake had a really good day, up 10%. No release of results, and not Spotify, Shopify had a really good day, which sort of I think was because of Amazon's results. But anyway, I don't want to talk about the American markets here or American companies. I want to talk about the American market and the Nasdaq all-time high. Is it all-time high? Let's confirm this. Yes, the Nasdaq closed at an all-time high, 17,642.7. So things are looking good for the Nasdaq in a beautiful uptrend. A couple of buy the dip situations in the past 8 months or so. Russell 2000, which is a sort of not a proxy, it's the smallest 2,000 companies in the Russell 3000, which is the 3,000 biggest companies on the New York Stock Exchange and the Nasdaq. And this is not quite as strong. In fact, it's still, I wouldn't say struggling. Connection lost. No, now connection back. But it's more similar to the XJO than anything else on the American market. So this is still a small cap proxy index, and you can just see this struggling. So all the heavy lifting on the American markets is being done by bigger companies. Now, this has been a problem in the past, and if I remember correctly, it was a problem leading up to either the GFC, but I think it's more likely a big problem leading up to the tech bubble crash back in the early 2000s, that all the heavy lifting was done by a few companies and the majority of the market was actually falling at that point in time. And that's actually not a good thing. Not a lot of research I've done on that, but the little bit of research I have done suggests that you want the whole market rising. You just don't want a few companies rising. You want the whole market rising. Anyway, so the Russell 2000 going sideways, and the Dow Jones, which is 30, this is the Dow Jones Industrial Average, which is 30 companies. I can't remember which 30 companies they are. A long storied history, over 100 years. Well over 100 years now. Wasn't created by Dow Jones. I'm pretty sure it was one of his students who created the Dow Jones Industrial Average. I could be completely mistaken. I'm trying to remember my history on this subject. And I think it was the Dow Jones theory was developed by his students, not by Dow Jones. And maybe the Dow Jones Industrial Average was developed or created by Dow Jones. Anyway, maybe I should refine my history lessons or go back to some of my history lessons. Anyway, Dow Jones is in a beautiful uptrend. Beautiful uptrend. Is this at an all-time high? I have a feeling it is. Yes, an all-time high. Anyway, so that's all for the indices. Now let's have a look at some commodities, starting with gold. So what we want to see here is some bullishness, some breakouts, some all-time highs, that sort of thing. And I don't think we're going to see much of that apart from uranium. Gold is still struggling just below that important level around about 2060. I wanted to see it above 2060, but it is struggling. We've seen it try to get above that level about 4 or 5, maybe even 6 times in the past. In fact, let's have a look at the weekly chart. So 2060 was that level became sort of significant back in 2020, more significant in March 2022 when it failed to break above that old high. And then it touched it again in May 2023. It roared past it in December and then fell back quite quickly. So that was a false breakout. And since then, it has been just going sideways. So if we just zoom in on the daily chart for gold, you can see it back on 15th of January. And then as recently on the 1st of February, gold tried to get above that level and just pulled back. And now we're back down to 2040. In fact, on the 2nd, or was it the 1st? On the 1st of February, gold got as high as 2065, so just above that level. So again, I'd like to see or view these resistance zones or resistance levels as zones, not a single price. So between about 2050 and 2070 or 80 is a resistance zone for gold. Eventually, in my opinion, gold will break out above this zone because over time, gold's going to increase in price simply because inflation, that sort of thing. So eventually gold will get high. You can just see that with the monthly chart. Just look at the monthly chart. Gold is always going to get higher. It's just been going up and up and up and up over time. So eventually gold will get to a new time high, but when that's going to be, I don't know. I still own a few gold companies in my portfolio. And in fact, I'm going to show you one of those gold companies. Yeah, West African Resources. Iron ore, I sold Mount Gibson on Thursday, and then on Friday, iron ore fell 3.6%, but we didn't see any sort of correction in the iron ore companies on the ASX. In fact, I'm pretty sure Fortescue price went up for some reason. So this is actually looking a little bit more bearish for iron ore. So on that big down day on Friday, we did see iron ore fall through a support level at about $130, and that was a pretty significant support level because it was resistance, became support. So we want to see iron ore get back above 130 pretty quickly, or this could be fairly bearish for iron ore moving forward. I still own Phoenix, but if I see a little bit more bearishness in iron ore, I might sell my Phoenix shares as well. Uranium bullish. There was a little bit of dip last week, but now it's back up to $106. It did fall below $100 briefly, but was it the Kazakhstan uranium mine, Kamiko, whatever it's called? I forget what it's called. Is not shutting down, but something happening to that mine or some of the mines in that region, and that's why there was a bit of a run on uranium during the week. So congratulations to those who are sticking firm with holding uranium companies. Oil, surprised when I looked at oil, because I did have a look at some oil companies on the ASX, and I didn't see any significant decrease in the share price. But oil had three really bad or down days on the Wednesday, Thursday, Friday. It fell from $78 to $72.30. So I'm not sure why there was not likewise reaction to oil companies' share price on the ASX. There might be some reason. Lithium, won't talk about lithium, still falling. Copper, always want to have a look at copper. Copper's really not doing anything right now. No trend, really just going sideways. I do have Whitehaven Coal, trading that, because I think maybe we have reached a bottom because of a low, sort of a significant, not a significant, but a good support level for coal and Newcastle Coal, which I'm pretty sure is thermal coal, up 2.5% on the Friday. So happy with that. And that's it for commodities at this point in time. Now on to Bitcoin. So there was a bit of, I wouldn't say panic, but a few weeks ago, Bitcoin, 22nd of January, Bitcoin fell about 5% in one day, but it's rallied since then. And Bitcoin's in an uptrend. I would like to see Bitcoin get above about 49,000, if not 50,000, because that's the highs we saw back in or on the 11th of January. So we want to see new highs when something is in an uptrend. We want to see new high or high highs, higher lows, that sort of thing. So we want to see a previous high being overtaken to confirm the uptrend is still ongoing. And bonds, US 30-year bonds. I think last time I talked, last week, I said the US bonds had reached or got very close to a resistance level. And then we did see it drop or fall away from that resistance level. 5 down days in a row. And on the last day, on Friday, the US 30-year bonds actually had a nice bounce up 2.5%. And you're going to see likewise with the Australian 10-year, very similar. I'm not even sure why I would show you both of these. They should mirror each other fairly closely. And the reverse mirror is the TLT, the 20-year Treasury Bond ETF. This should be the complete opposite. It's like a mirror reflection, not a mirror reflection. It's just a reflection of the bonds because, again, bond yields and bond prices are inversely related. If I was just looking at this, you see a really big pickup in volume since about September. That's actually a pretty good sign, particularly when you compare it to about 1 year ago. So this is telling us that the market is getting excited about TLT. So they expect this to turn into an uptrend eventually, and it's looking like that. I think eventually this is or will turn into an uptrend as bond yields continue to fall, if they continue to fall. I'm not saying they will, just possibly. Okay. Now on to 20 individual companies I'm going to show you. A couple of these are just updates. Nanosonics and Dominos Pizza had bad weeks last week. I'm just going to show you the updated charts for those and what I'm looking at. If I remember correctly, Nanosonics is looking bearish. I'll tell you why. And then some of the other companies I'm going to show you are companies I own and trading. Doug, Megaport, Electro Optics, Droneshield, Judo Capital, Polynovo. I've had a few requests in regards to Aroa Biosurgey. I had a bit of a shock when I saw that chart. It looks really bearish right now, but a possible valuation play there for that company. And then a couple of gold companies, Silver Lake Resources and West African. I was trying to find some good looking, some bullish gold companies. Northern Star was one of those, but I decided to look at two other ones, including a company I own. Argo, a lot of people have been asking about Argo for some reason. And then PNI, which is Pinnacle, is looking pretty good. I don't want to go there yet, Michael. Endeavour, Bega Cheese, A2 Milk, looking pretty bullish. ANZ, Resimac, and then AGL. Not all these companies are looking bullish. In fact, one of those companies is looking really bearish. I would leave that too when I get to that particular company. Now, let's start off with Nanosonics and Domino's Pizza. For these companies, you can see, maybe you can't see, but both of these companies released a really negative announcement 1 week ago. Share price dropped about 30%, and I want to see a bit of a bounce, and I don't want to see a breakdown or breakout below a support level. And I'm thinking that could happen for Nanosonics. The reason I think that could happen, you can't really see on the daily chart, but you can see it on the 5-minute chart. We'll have a look at the 15-minute chart. Now we'll have a look at the 5-minute chart. Maybe, yeah, 5-minute chart. So when the company released their really bad announcement, the share price plunged in that first 5 minutes all the way down to a low of about $2.80. And then we saw the share price recover. And around about $2.90 has been a really important level for this company. Share price has been struggling to get that below 290, and we can see it happening about 4 times. So after that bounce, when the market overreacted in the first 5 minutes, the share price then corrected to 290, and we've seen it just trade sideways after that. And then a couple of times we have seen the share sell off. First time was on the Monday the 29th. Shares sold off on open down to $2.90. And every single time the share price gets $2.90 or around 290, not right on 290, we have seen the share price bounce. But the main thing is every single time the share price bounced, the highs we've seen have been getting lower. This is like a descending triangle pattern, which is bearish. And what I mean by that, so the first bounce, we saw the share price get up to $3.15. The second bounce, $3.10. The next bounce, about $3.04. The next bounce, about $2.99. And then the next bounce, about $2.98. And then the next bounce, $2.98. And then the bounce, we've just seen it come off, $2.95. So the highs are getting lower and lower. So this is the very definition of a descending triangle when the base is sort of flat. And this suggests that eventually the share price will fall below $2.90. And the whole reason behind this is because there's less and less strength when the share price rallies after the share price pulls off $2.90. So a little bit bearish about Nanosonics. Still holding this, still got it in my quality portfolio. Not sure I could define this company as a quality company just now, but I'm more in this company for the 5, 10 to 20 year period, not because of this noise in regards to this particular announcement. This announcement, in my opinion, was just short-term noise. Now, do we see a similar thing with Domino's Pizza? So what I'm looking for is a bounce of one of the lows we have seen after they released the announcement. Preferably, the low is on the first trading day after they released the announcement. And for Nanosonics, that was 280, and it was the first day. But I'm fearing that Nanosonics will go lower from here. Now let's have a look at Domino's Pizza. Do we see the same pattern? Not exactly. So all patterns are different. In fact, I'm a little bit more bullish on Domino's Pizza. We did see the low at $38, I believe, around $38. Or was it $39? No, $39, sorry. $39 on Thursday, 25th in the afternoon. So they released their negative announcement on the 25th of January, and the low in the share price was in the afternoon, and then we saw a bounce. And look at this. Look what happened on, what day was this? The 1st of February. So a week later. So we saw some selling on the Wednesday into They started trading on the Thursday. And remember, Thursday was a down day on the ASX. And we saw a fair bit of volume coming in as well. And as soon as share price got to $39, what happened? There was a bounce. So again, technicals work. The reason technicals work is traders know $39 was a low this company's share price saw on the 25th of January. And if they see it bounce, which had happened, so maybe some day traders saw it bounce here at 10:45 and they put some, put a trade in. And that's why share price went on a bit of a tear. It went from $39 back up to $40.80 quite quickly in about 2 hours of trading. So it seems like that could be a nice little support level for Domino's Pizza. Not quite the descending triangle we are seeing with, just like we saw with Nanosonics, but still, I would like to see the share price get above this high we saw back on the 31st of January, and that high is around about $41. So we say $42. I want to see the share price get above $42 for Domino's Pizza. Not far off it right now at $41.18. So those are two updates for companies that released negative announcements last week and the previous week, still following the fortunes of those two companies' share price, not the financial performance, just the chart for those two companies. Now onto a company that I bought just for a trade, and then I put into my small cap portfolio because the share price is on a tear, and it seems like what the company's doing is quite exciting. But if I'm being really honest with myself, the whole reason I bought this company was a technical trade way back here, back about a year ago, in fact. Yeah, I've been holding this company for about a year, and there was a breakout, classic breakout. I could see there was a high in August 2022 at about 60 cents, and the share price got above 60 cents in January 2023 and started to go high. This is a classic shift in trend, a shift in sentiment, a breakout. Don't think there was any positive announcements at that point in time. The only thing missing was heightened volume. So sometimes you'll see a breakout without heightened volume, but share prices continue to go higher. And we have seen, if you do look at the weekly chart, you have seen increase in volume. So even though I have read in places that volume precedes price action, in this case, we saw the share price reacting before we saw the increase in volume. So look at that increase in volume in the last half of 2023, significantly higher when the share price was near its lows in the second half of 2022. So let's go back to the daily chart. This is a well-defined uptrend, and I am trading this. So I'm going to put this company into my trading portfolio because this is what I'm looking at. And in fact, when you saw this little bit of a dip in the share price in November, I was thinking if the share price fell below $1.60, that would be fairly bearish and I might take profits. But it didn't bounce. I mean, it didn't fall through that level. In fact, it bounced off that level. Exactly. So that was an important level because that was the highs we saw back in July. And the reason why the share, although there was a bit of weakness in this company, was because I believe, was it the wife of the CEO or founder or someone sold some shares? And for some reason, participants in the market, or some participants in the market, they don't like when insiders sell shares, even though research has shown that in the longer term, or say medium to longer term, there is no relationship between insider selling, for instance, just one insider selling, and the financial performance of the company. Now, when you get a group of insiders selling, and they're selling a heap of shares, that is a signal. But in this case, it was just the wife of the director selling some shares. The market panicked for a brief period of time. That's why you saw the share price fall 11.4% on the 29th of November. And whoever sold at about $1.60 is now, I wouldn't say regretting it, because I'd never regret when I sell. But for some reason, the share price of this company has been on tear the last few days, up almost 10% on the Friday after being up 5.4%. And the share price of this company is an all-time high. So this is the very definition of a breakout. In fact, I'm going to get rid of this line. Very definition of breakout of what I'm looking for and what sort of gains you can experience in a year. So if you bought on the breakout here, you would have bought at 60 cents. Share price now is $2.33. So this company's valuation has quadrupled in 1 year. That's why I am becoming more and more of a technical person, because of these sort of scenarios. If you just bought, based off the potential of this company, or maybe you're just looking for financial confirmation this company is becoming profitable. There are those investors out there who need a few years of history. You would have missed this beautiful technical trade. That's just me. Anyway, KMD Brands. Okay, I am thinking of doing standalone technical videos, and in those standalone technical videos, there should be one company. So focusing on one company. And if I do that, the first company I'll be featuring will be KMD Brands, because you can find out a lot about this company. But the reason I included KMD Brands in this particular video is not because the share price is in a well-defined downtrend, and this downtrend is well-defined. It was after a period, it looked like the share price was in a trading channel, and this was between about November 2022 and July 2023. And there was a potential breakout in May 2023. I still remember this. And there was one thing holding me back. Now, one thing holding me back was volume. No volume on that potential breakout. That's why you want to see volume. You want to see some power, some strength to the breakout. And we saw none of that with KMD Brands. And then it failed that breakout. And the share price went to the bottom of the trading range. A nice little bounce off the bottom of the trading range, which is what you expect. And then the company released something negative on the 12th of July, and the share price has been a downtrend since then. This also makes a fool of those people who say, when you see the share price drop or rise like 10%, you've missed the boat. Oh, you're too late. You're too late. I've heard someone say this on one of the podcasts, Andrew Page, say this on one of the podcasts a few weeks ago. He said, well, if the share price rises or falls 10%, you've missed the boat. You're too late. And this should show you that is complete rubbish. So on that particular day, the 12th of July, 2023, KMD Brands share price fell 9.3%. You did not miss a boat. You could have sold on the next day at a share price of 90 cents. Share price right now is 64.5 cents. The reason why the share price has collapsed since then is because the market doesn't react immediately. Sometimes it takes a while for the market to react. And sometimes on an instance like this, when the share price breaks below the bottom of a trading range, that is a technical bearish signal, and no wonder the share price just collapsed after that. So no good things coming to KMD Brands because of that particular point. So don't worry, if the share price rises or falls by 100% in a day, well, maybe not fall by 100%, that would be really bad scenario. But if the share price rises 100% a day, you haven't missed the boat. Don't listen to those experts who say that. It's ridiculous. It doesn't hold water. They don't know what they're talking about. They have their biases. That's why they say it. They have their own perceived biases. They think that's true. It's not true. And this should be proof. KMD Brands fell 10% in July, and the share price is now about 33% lower than that day, or the day after when you could have sold out. Anyway, the whole reason I'm showing you KMD Brands is not because the share price is in the world-wide downtrend. It's where the share price is right now at 64.5 cents compared to historical levels. So let's look at the weekly chart for this, and you'll see why. So look at the weekly chart. We can go all the way back to 2012. In fact, let's look at the monthly chart. Get rid of these moving average channels and the EMA. You'll be able to see it when we look at the monthly chart. All right. So, share price of KMD Brands, they would have been called Kathmandu back then, and they wouldn't have owned Rip Curl and the other Osbo or Ozboz shoe store they'd now own. Share price of KMD Brands back in 2012 fell down to a low of 63.5 cents. During the COVID-19 financial panic, share price of KMD Brands fell to a low of 44 cents. But you can notice there was a lot of buying coming in, because on that 1 month candlestick, although we'll look at the weekly chart for that, because all the action during the COVID-19 financial panic happened like in a month. But there was a week, the week of the 23rd of March, and I'm pretty sure the low in the ASX and international markets was the 23rd of March. And in that week, the share price went from a low of 44 cents and closed at 65.5 cents. And you can notice, if you have a quick look at this, the share price was hanging around 62.5 cents for about 4 weeks. For instance, in the week of the 6th of April 2020, share price fell to around about 60 cents and then bounced off that. You also notice a massive volume coming in. So again, volume is very important. And this is the reason why the share price rallied, is massive amount of volume coming in at that point in time. Now look what the share price is right now, 64.5 cents. So we're right at the levels, the lows we saw, maybe not the lows, but near the lows we saw back during the COVID-19 financial panic and back in the lows of 2012. So possible bounce off the lows. So investors know that this level is all-time lows for this company. So interesting levels for KMD Brands. Doesn't mean I will buy a position. Also, really big volume coming in for KMD Brands the last, particularly on Thursday. But that could be just a one-off. That could be just a cross-trade institution taking a big position in the company, another institution selling a big position. I like to see big volume days after this one to confirm we are near the low, and you might see a bounce for KMD Brands. Now to Megaport. And this one is a trade I made. So this is a beautiful breakout. This is just playing out beautifully. So Megaport released their Appendix 4C. I did a standalone video on this. Share price closed at $12.48 on Tuesday when they released, the day they released their Appendix 4C. The highs we saw back in August were around about $12.50. That's not the exact high, but sort of that level, 12.50 cents. And we have seen, and we can see this just by looking at the 5-minute chart, and we have seen Megaport share price sort of oscillating up and down below $12.50 for about 3 days. So the Tuesday, Wednesday, and Thursday. And then on Friday, no more oscillating share price increase. Was it 4.2%? And close at $13. So a potential breakout for Megaport. This is exactly what I'm looking for. And again, this is another instance, or a possible another instance, when a share price increased 27.6%. You may not be too late. This could be the start of a really big run for Megaport. In fact, we saw that back in July. Share price of Megaport increased 33.8%. I took a trade either that day or the next day, and the share price kept going higher. In fact, the share price went from about $9 to a high of $12.50. So you could have made 30 to 40% just by trading Megaport, which I did back then. Share price pulled back and then it's taken off again. I'll put these moving. There we go. And the other thing is, and fairly important, is when was the last time the share price of the company was this high for Megaport? And we're talking about almost a 2-year high for the company. So this looks pretty bullish for Megaport right now, and this is one of the reasons I'm trading it. I got in a little bit earlier than confirmation of the breakout. Ideally, you want to wait for confirmation because I bought at $12.48, right, which is just below, but I expect the share price to break out. It was just my expectations, and it's all based off pattern recognition, that sort of thing, and really good volume coming in. Not as high as probably I would like, but still pretty good volume. Another company that released a really bullish Appendix 4C. I should do a standalone video. Last time I did a standalone video on Electro Optic, someone complained. They said, "Oh, why are you? What's that word where you pumping?" That's the word they use. Why are you pumping this stock? It's a dog stock. It's an awful company. Why are you pumping it up? And more than likely, that person bought at a higher price, and they watched one of my videos and thought it was a good company, and the share price fell maybe 10, 20%. And as soon as the share price fell 10, 20%, it's automatically a dog stock. I don't care whether this company is a dog stock or not. What I care about is the charts and how they're performing on their Appendix 4C. And there's no debate. It was a really good quarter for this company, but there's still a few red flags when it comes to this company. But the new management is doing spectacularly well so far. And I'm thinking the market is seeing likewise. So you can see the rally of after the company released their Appendix 4C. And this is, I wouldn't necessarily call this a breakout. It's very close to a breakout. The last time the share price was this high was the 8th of August. So we're nearly at a 6-month high. That's what I want to see. Confirm a breakout, at least a 6-month high. Now, I can be a little bit flexible when it comes to 6-month high. I keep saying I'm waiting or not looking for a 6-month high, but sometimes I will buy when it's a 5-month high, sometimes even a 4-month high. So I'm looking for a 6-month high, some flexibility. I'm looking for a positive financial announcement. We've seen that with Electro Optics, and I'm looking for increased volume. We've definitely seen that for electric optics after a period where volume was quite low. So we saw heightened volume between May and August of last year, and then the share price went sideways. And now we've seen increase in volume, and the share price is at about a 6-month high. So things are looking pretty positive for Electro Optic Systems, and I probably should do a standalone video on this company. If you have a look at the weekly chart, probably not quite as bullish. Yeah, not quite as bullish, but will the share price get back up to $10? Who knows? Maybe in 5 or 10 years. But this chart is looking good. Possible trade. I bought Droneshield on the back of their Appendix 4C, and this was probably a good decision I made. It was, again, a positive financial report. I didn't think the market overreacted. I thought the market probably reacted to their Appendix 4C with calmness. And that's one of the reasons I bought, actually. But look at the volume. So I talk about volume. Just look at the volume, what's been happening with this company the last 4 trading days. The volume has absolutely exploded, coinciding with the share price absolutely taking off. Now, I do get a little bit nervous when I see a chart like this, when the share price has gone exponential. We sort of saw that back in January of last year. Share price went exponential. Share price went from 19 cents to 42 cents in a fairly short period of time, and the share price pulled back. So more than likely, when you see the share price rise like this, and also pretty good volume coming in as well. So when you see the share price rise like this exponentially, you eventually will see profit taking, because people like me want to take profits because they get a little bit nervous when they see a chart like this, see share price action. We also saw a bit of a gap forming. That could be a sort of a runaway gap. Potentially, that will be the best case scenario for shareholders like me, a runaway gap. And they have been releasing some positive announcements as well. So Droneshield, this is up 12.6% on the Friday. So this is in my small cap portfolio. Maybe this should be in my trading portfolio, because I'm willing to take profits in this company on the hope the share price will pull back. And if the share price does pull back, I'd be looking at getting back in at about 40 to 42 cents if it does pull back. But the main concern would be it doesn't pull back. Share price goes sideways. Sometimes you do see that share price goes on a run, share price goes sideways or consolidates. That is a really good sign when that happens. So if you look back in last year, when the share price for Droneshield went exponential, share price didn't consolidate and go sideways. It actually did pull back. I'm trying to think of an example of a share price just going sideways. Gentrack is a perfect example of this. I don't know why Gentrack came to mind. Look at this. This is a perfect example. It's happened for this company a few times now. First time was back in November 2022. Share price went on a massive run. Look at that. And I was trading Gentrack here, and I took profits. And probably my mistake here was thinking the share price would pull back. After share price increased 14.9% and then 20% in consecutive days, and there was a breakout. But look what the share price did. It just went sideways. There was no selling. And it sort of went sideways, but it was then gently creeping up. Same thing happened here. Company released a positive announcement on the 22nd of May 2023. Share price rallied 29% on that day, and the share price went sideways. And look at this. Share price of Gentrack went on a run here. So I'm still holding shares. I have taken profits. So share price of Gentrack went from $4.75 to $6.20 in 5 trading days. Look at what the share price is doing. It's going sideways. And now the share price has just taken off. And as soon as it hit this moving average channel, it's taken off. So that is what's possible for Droneshield, not necessarily what's going to happen, but I am mindful that that might happen. And I have made the mistakes in the past of taking profits, thinking the share price might pull back, and it doesn't pull back. It just consolidates and goes sideways. In those instances, that is way more powerful than the pullback. Someone has asked me whether they should take profits with this. I have no idea. I don't know what's going to happen. If we don't see any selling in the next few days, there's a chance the share price might not pull back any significant amount. I have taken a position in Judo. So I did mention earlier that I sold some companies. I did not mention what I bought. So I bought Judo. I added to my Money Me position Megaport and Polynovo, although I bought Polynovo 2 weeks ago. So Judo is a trading position. Now, this is where I'm being a little bit flexible with my 6-month rule. So Judo Capital did release a good positive financial announcement. Share price has rallied on the back of that. And that was on the 23rd of January. No pullback in the share price. Share price, in fact, has gone a little bit higher, and that's actually a good sign. So no selling is coming in. And last time the share price was this high at about $1.20 was actually 24th of August. We're talking about a 5.5 month high, or maybe a 5-month and 1 week high. So this is a case where I am being a little bit more flexible, but this was just a good financial announcement. The market liked it. I liked the announcement. Volume, now because there was a spike in volume back then, some good volume did come in, not as high as I would like. So this is one of those financial plays, and a lot of good financial charts on the ASX. I'll get to some financial charts in a second. So this is just a trade for me, Judo Capital. I keep wanting to call them Judo Bank, but Judo Capital. Polynovo, another instance of a breakout. So this company released a positive financial result on the 22nd of January. Share price rallied on that day by 10%. Share price went above this important level. There it is. There it is. The highs we saw back in August 2023, and then again in this January 2024, broke above that. And look what the share price has done. It's continued to go higher. So last time the share price was this high was back in March of 2023. So we're definitely beyond a 6-month high. Now, I do prefer at least a one year high, but I will willing to take a 6-month high. Some good volume coming in and a good financial report. That is what I'm looking for in these sort of setups. So I have taken position in Polynovo, although I did take a position in Polynovo, I'm pretty sure it was either on the 22nd or the 23rd of January. Now on to another medical company, Aroa Biosurgey, the most popular company among viewers of this channel in terms of how they thought, or what they thought, which company would perform best in calendar year 2024. It was a fairly popular pick among institutional or experts, but for some reason, Aroa Biosurgey share price has nosedived in the past week. More than likely, this is on the back of their Appendix 4C, although I had a quick look and it didn't seem that negative. And this leads to a possible buy the dip situation, although it does not look happy. Not happy, good. So I actually have owned this company in the past. So in fact, I traded this company. So we saw a breakout in Aroa Biosurgey in November 2022, and then the share price went on a run. And then when there's a bit of weakness in the share price, I just took profits. Not quite my 20%. I was thinking it was a little bit less than 20%. And the share price has moved into downtrend. We have seen a little bit of rallies in the share price, but no real strong movement in terms of volume. And then for some reason, the share price has just collapsed. So this is looking attractive just based off, I am bullish about this company in the longer term, and the share price right now is an all-time low. Eek, all-time low. So if you are a shareholder of this company, why has the share price collapsed for Aroa Biosurgey on higher volume? It could be just one fund manager selling their position. I don't know. But maybe it is oversold, and maybe now is a good time to buy the bounce. I'm going to think about buying the bounce for this company. Buy the bounce opportunity. Buy the bounce opportunity. Okay, now onto a couple of gold companies. First one is Silver Lake. So I was thinking of including Northern Star because actually Northern Star looks okay. Pretty good. Pretty good. It's just gone above the previous highs we saw back in December. And the last time the share price was this high was about 8 or 9 months ago. But I've decided to include instead Silver Lake Resources and West African. So Silver Lake Resources share price rallied 5.4% on the Friday. I'm not sure why, but share price of this company had been a downtrend. Look at that downtrend, beautiful downtrend. And when I say beautiful, just a well-defined downtrend. When the share price rallied, it was weak, and the share price fell, and each rally was weaker than the previous one. You can see the highs keep going lower. That's a definition of a downtrend, and the highs getting lower and the lows getting lower as well. And now we have seen an end to that downtrend, because the next high, the last two highs have been higher than the previous high. So we're now into a developing uptrend. So my preferred trade is to find those companies that have released a positive financial announcement, uh, increase volume, break out in the share price at least a 6-month high. But these sort of setups I'm always looking for as well. Share price has moved from a positive or from a negative downtrend to a positive uptrend. That's those words are obsolete. The share price has moved from a downtrend to an uptrend. Sentiment has shifted from negative to positive, and we're seeing that with Silver Lake Resources. I don't know what's causing this shift in trend in the share price or this shift in sentiment, but I am seeing it on the chart, and the chart does not lie. So this is a possible trade. And the last time the share price was this high was in May of last year. So at least a 6-month high. But this is a developing uptrend for Silver Lake Resources. Yeah, maybe I should have a look at Silver Lake Resources. I'll put that down too. I have to get over this. What I do is, if I don't know why a company is trending like this, like Silver Lake Resources, where the trend was down and now it's up, and sentiment has definitely shifted from negative to positive, or I always want to try to understand why. But sometimes I don't. Maybe you don't have to understand why. Just look at the chart. This is breaking out. It's in an uptrend right now. So maybe I don't have to understand why. Just trade the chart. Maybe that's something I have to improve upon. And likewise, West African Resources. This is a company or a company I own. So this would be in my small cap portfolio, and I think this is significantly undervalued. Yeah, significantly undervalued. Still, yeah, just above $1 billion right now. And yeah, we have, just like Silver Lake Resources. This is actually may not be identical to Silver Lake Resources, but this is a fairly similar setup. And the last time the share price was this high was back in April, May of last year. So share price is now moving in a developing uptrend. Now you might think, all got companies like this, but they're not. Just picking one at random. Actually, no, I'll pick Capricorn Metals. I actually do like Capricorn Metals. I've heard on this in the past. So just spot the difference between those two companies and Capricorn Metals. Well, Capricorn Metals, there is no trend. You might say the longer term trend is up, but Capricorn Metals share price is going sideways. So nothing there. Some people love Gold Road. Well, let's look at De Grey. Everyone talks about, all experts talk about De Grey mining, but this is way less bullish. This is in fact negative. In fact, you could put a downtrend almost here. No, there's a downtrend there with De Grey mining. Don't know, yeah. So more than likely, those who are bullish on De Grey don't look at charts. And that's probably all I'm going to talk about. Gold companies. For some reason, a lot of people have been asking me about Argo Investments. I had a look at Argo Investments, and I would not invest in this because it's like a fund manager. And I had a look at their holdings, and it's just like buying an ETF. So why would you pay more fees for Argo when you can just buy an ETF? That's what I would think. I don't say that to anyone who asks me. I just say no interest in this company. But just because I have no interest doesn't mean you can't have no interest. But the chart looks interesting. So even though I have no interest in this company, doesn't mean I won't trade it. So trading is completely different. And this is breaking out. This is changing, just like the two gold companies. So you put a line at the old high, the previous high we saw in August last year, and the share price has gone above that. And this is an important reason. So you can see here, back at the start of January, the share price tested that old high and pulled back. And that pullback wasn't that strong. In fact, it was fairly weak. And then share price started to rally again. And now it's pulled above those highs we saw back in August. So this is exactly what I'm looking for when I'm cruising through charts. But just because you see a chart like this doesn't mean you have to take advantage of it. There's plenty of opportunities, and I'm going to show you a few more. Next one is Pinnacle Investment Management Group. And this one is a breakout from a downtrend. Okay, a fairly weak downtrend. Well, in fact, you could say this was a descending triangle because each high was lower than the next one, and it was sort of going sideways here. And you could say that's bearish, but it's broken above it. Some good big volume coming in on the last trend day of the week. Maybe there's some reasons behind that when the share price rallied 8.6%. This could be the definition of a breakout for Pinnacle Investment Management. So definitely putting that on my list. I'm putting all these names or these ticker codes on a piece of paper, or otherwise I'll forget. Yes, I have bad memory. Endeavour. So a lot of these companies I'm sharing with you, I'm more than likely will not trade, but I'm just sharing you possible trades, possible interesting setups, and Endeavour Group is one of those. Now I'm just going to get rid of one of these moving averages, not that one, the other one. So if you just look at the short term, what's happening with this company short to medium term, does look like this company is moving up, moving into a short-term uptrend. So last time the share price was this high was back in August, so about a 6-month high. Not big volume coming in, no positive financial news, but I'm just looking at the chart. The share price has moved above the 150-day moving average. That's a positive sign because typically, and maybe I'll just put this now. So typically, the longer-term moving average channel, it has been a resistance area and it's just moved above that channel, that zone. So it looks like there is a little bit of strength in Endeavour Group right now. Doesn't mean you have to trade it, but it's just an opportunity. Just like Bega Group. I don't think this is a high-quality company at all. In fact, when I looked at the financials of this company, it was not that nice. But share price of this company looks like it's moved into an uptrend. So it's bounced off the high lows, about $2.50. Now it's at $3.75. Last time share price was this high was May of last year. We have seen a higher high. So things are moving in the right direction for Bega Cheese after a long-term downtrend. Yeah, so maybe this is a trade. Don't know why. Have released no financial news that I can remember. Unlike A2 Milk, now I don't think this company has released financial news, but I just remember reading that the birth rates were a little bit higher than they expected in China, and that did cause a little bit of excitement for A2 Milk. Not sure why, because birth rates are still pretty bad in China, but look at that share price just taking off. Now, I wasn't really following this company all that closely, but the breakout was just there. So we saw a bit of a rally in the share price back in December. Share price got to about $4.30 and then it pulled back. The share price tested that level again, $4.30 on the 19th of January, and then there was a breakout on the 22nd of January. That was a time to get excited about A2 Milk, buying on that particular day. You could have bought at $4.50 and already made 50 cents. So what's that? 50 divided by 45, say just above 10%. With A2 Milk. Now, I'm not sure, I won't say this is a breakout just yet. Volume has been really good the last few weeks as well, but this, yeah, it is looking interesting. A2 Milk. Last time share price was this high was August. You've noticed a few times now in this video when I've said the last time the share price was this high was in August last year. So we are looking at 6 months high for a lot of these companies. So A2 Milk could be an interesting trade. I probably would like to see a little bit of pullback now, and then that pullback on low volume. So when you see a pullback on low volume, that's actually quite bullish. That's actually a good sign. There's not a lot of sellers out there. Now onto a couple of financial companies. ANZ. I don't usually bring you banks, but I have to bring you ANZ. Doesn't mean I will buy or trade ANZ, but the share price of this company has broken out. So again, let's have a look at the weekly chart. So this is like a ascending, instead of a descending triangle, this is like an ascending triangle. So the lows keep getting higher and higher. We have about 3 of those, 1, 2, 3. And the top is sort of going sideways. So the top of the range is about $26, or was $26. And you can just see the upward sloping line and the horizontal line, we're getting closer and closer. And in this sort of setup, what you're waiting for is a break above the horizontal resistance line, or the top of the ascending triangle. And that breakout occurred on the 19th of January, 2024. And look what's happened after that. Share price has just taken off. You could have bought in maybe the next day at $26.20. So you've gained $1. I still think the banks are overvalued, although price to earning ratio for ANZ is only 12. That's probably, I would only buy the banks if they have P ratio of below 10. Whole bank has a P ratio now 20. That's ridiculous. But in saying all that, maybe I shouldn't care about the financials. Maybe I just look at the chart and go, oh, this could be just a trade. Maybe that's what I should do with ANZ Bank. Resimac, I'm pretty sure this is one of these lenders, SME lenders, something like that. Let me have a look. Provision of mortgage origination and management of home loans. So maybe not what I was thinking. So they are a competitor of the big banks, looks like, because the banks are just mortgage people, mortgage banks. They don't care about SME loans, that sort of thing. They're just mortgages, all about mortgages. And that's why we are in a bubble when it comes to the property market in Australia, because the banks, the big banks. Anyway, this is looking interesting. Resimac. Looks like although in saying it, a lot of these companies are looking interesting. So Resimac, Money Me, I'm going to forget some, Prosper, Plenty, I'm forgetting some without doubt. They're all starting to look interesting because this has been a beaten down, Judo Capital has been a beaten down part of the index or the market, and the experts hate these companies. They've been hating on them for the last few years. Just have a look at some of the Ausbiz, the call sessions when some of these companies have been brought up, and it's been sell. You have to sell these companies. They're awful. Oh, they're going to suffer. That's when you should get interested, excited about these companies. So Resimac looks really interesting right now. It has taken off. It has broken out. I'm not sure if they've released any financial news, and the share price is almost at a 1-year high. Look at that. So this is a little bit different. What's happening now is a little bit different than what we saw in January of last year. That increase in share price, rally in the share price was not on strength. This rally in the share price is on better strength, and there's less resistance moving forward because this rally was not a 6-month high. In fact, that happened in January, and last time the share price was that high was in September. So we're talking about a 4-month high. Now we're almost at almost at a 1-year high. So there's less resistance moving forward. More than likely, there's a little bit more positive sentiment in this sector, in this industry. Back here where the share price of Resimac was rallying, there would have been less positive sentiment, would have been negative sentiment still in the sector, and that's why that particular rally was doomed to fail. Not with this one. This one may continue from here. So another possible trade for you and for me. And finally, AGL. This is not a possible trade in my opinion. This is just what is happening with AGL. Share price has collapsed. So this is another company. I would never own this company for the long term. This is not a quality company. This is a trading company. So you buy this company somewhere here when the share price is taken off, you sell it, you take profits when the uptrend has come to an end. Now the share price of AGL Energy is in a downtrend. How low can it go? Who knows? Now, in saying that, so I'm going to put the long-term uptrend here. Here it is. So weekly chart. The long-term uptrend from the lows we saw in November 2021, we can see it lines up. The next two lows line up pretty well, and now the share price of AGL Energy is right on that uptrend. So there could be a bounce here just because it might bounce off the uptrend, the long-term uptrend. If it falls below that, it means the long-term uptrend has come to an end, and there's no more long-term uptrend for AGL Energy. So possible trade. So even though when I first looked at this, I thought, ew, it looks ugly. Why would you trade this? Possible trade just because of a long-term uptrend. I think that's it. So that's it for today's video. If you have any questions, any thoughts, just leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. And what's happening with the cricket? 7 for 168. Oh, see me. To be fair, I don't mind if West Indies win. In fact, when they won the tests, how much did they win by? Was it 6 runs, 3 runs, 4 runs? I enjoyed it immensely. I still remember back in 1993 when the West Indies were the best cricket team in the world, and we almost beat them at home. We lost that Adelaide Test by, what was it, 4 or 5 runs. That was distraughting. That was really, maybe not, I'm being a little bit over-exaggerating there. But now I want to see West Indies do really well. I want to see them brought back to their glory days. I'm not sure it's ever going to happen. So the very fact that that bowler, that fast bowler, what was his name? Joseph whatever. Absolutely spectacular series by him, even though it was only 2 test series. So yeah, it'd be great if they won this game. Anyway, that's just me. I don't always support Australia in sporting competitions. Not always. Anyway, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.